Welcome back to BlueOrbit Tech. Today we're breaking down the state of crypto as of late November 2025. What's happening right now, which countries are driving change, what global regulators are planning, and what experts say about the future of Bitcoin, Ethereum, and the wider digital asset market. As of November 25, 2025, Bitcoin is showing its first signs of stability after months of selling pressure. On Bloomberg's market report published November 25 in New York, analysts noted that traders are finally seeing early signs that the sell-off is easing. Meanwhile, the Economic Times in India reported that Bitcoin climbed back to around $88,000, recovering from a 7-month low hit earlier in November. Ethereum and major altcoins also saw a small rebound on the same day, according to CryptoRank's daily update on November 25, suggesting that investor confidence may be slowly returning. In Europe, the push to regulate and institutionalize crypto continues. On November 25, CoinDesk reported from London that Bridgepoint Group, one of Europe's respected private equity firms, is acquiring majority control of HT Digital, a company that performs proof of reserves audits for crypto exchanges. This move signals something important. The industry is shifting away from anonymous speculation and toward compliance, transparency, and regulated finance. Meanwhile, in Switzerland, the SIX Swiss Exchange, one of Europe's largest financial markets, announced on November 19 from Zurich that it has added Leverage Shares Limited as a new issuer of crypto-based exchange-traded products. These include leveraged Bitcoin and Ethereum instruments, meaning more institutional traders are gaining regulated access to crypto, but also to higher-risk products. But, even as institutional adoption grows, crypto's vulnerability to fraud and hacking remains one of its biggest structural weaknesses. On November 20, 2025, the UK's Serious Fraud Office, SFO, confirmed the arrest of 2 individuals tied to an alleged £20 million digital asset fraud scheme connected to basis markets. According to reporting from The Guardian in London, investigators say the scheme collapsed after promising investors high-frequency trading returns that never existed. Another reminder that retail investors remain extremely exposed to sophisticated crypto scams. This wasn't an isolated event. Cybersecurity researchers have repeatedly warned that crypto theft is not slowing down. A Reuters investigation published in July 2024, citing blockchain analysis firms like Chainalysis and Elliptic, revealed that global crypto theft doubled to more than $1.4 billion in the first half of the year alone. Experts interviewed throughout 2024-2025 say this trend has continued into 2025 due to AI-generated phishing attacks, deepfake impersonation of exchange support staff, automated wallet draining malware, bridge protocol exploits targeting cross-chain transfers. Blockchain security firms also emphasize another major issue. The majority of attacks exploit human behavior, not blockchain protocols. This includes fake investment platforms, rug pull tokens, falsified celebrity endorsements, and impersonated wallet apps on Android marketplaces. Even with improved enforcement, crypto remains a prime hunting ground for scammers, and security experts say 2026 will bring even more advanced, AI-driven fraud schemes. Governments across the world are no longer ignoring crypto, they are shaping its future. And the regulatory map is changing faster than ever. In 2025, U.S. regulators such as the Securities and Exchange Commission, SEC, and the Commodity Futures Trading Commission, CFTC, intensified their oversight of crypto, especially in areas like stablecoins, staking, and lending products. Multiple enforcement actions were launched throughout 2025 against exchanges failing to meet compliance requirements, particularly around customer asset segregation and transparency of reserves. At the same time, the U.S. Treasury expanded its anti-money laundering (AML) guidelines for digital asset custodians. Washington's message is clear: crypto is not being banned, but it will be regulated with the same seriousness as traditional finance. The Markets in Crypto Assets (MiCA) framework, fully rolling out between 2025 and 2026, is transforming Europe into the world's first ultra-regulated and unified digital asset market. Officials in Brussels say MiCA will establish full licensing requirements for crypto service providers, strict rules for stablecoins, including mandatory reserve audits, clear consumer protection standards, unified oversight across all 27 EU member states. European regulators believe MiCA will shift the crypto industry away from speculation toward long-term financial infrastructure, making Europe a model for global regulatory reform. After a series of high-profile fraud cases, including the basis market's collapse, UK regulators introduced tougher rules on marketing crypto assets to the public. The Financial Conduct Authority, FCA, now requires registered approval for all crypto promotions, clear risk warnings in advertisements, faster reporting of suspicious activities, enhanced due diligence for companies raising funds in the UK. The UK aims to position itself as a safe trading hub where oversight and innovation can coexist. China continues its strict stance against public cryptocurrencies, maintaining bans on trading and mining. But behind the scenes, Beijing is pushing forward with one of the world's most advanced central bank digital currency, CBDC, projects, the Digital Yuan, ECNY. As of mid-2025, wider pilot programs launched across major provinces including Guangdong, Jiangsu, and Sichuan, integrating the digital yuan into transit systems, payroll services, and cross-border settlement trials with Hong Kong. China's strategy is clear: restrict decentralized crypto, but dominate the future of digital money through state-controlled CBDCs. In early 2025, Dubai's Virtual Assets Regulatory Authority, VARA, updated its rulebook to attract global exchanges seeking clarity and low taxation. Abu Dhabi's ADGM, Abu Dhabi Global Market, also expanded its licensing framework for institutional custody, tokenized assets, and derivatives. The UAE is positioning itself as one of the most crypto-friendly jurisdictions, competing directly with Singapore and Hong Kong to become a global hub for Web3 innovation. What experts say about the future? Bloomberg intelligence analysts say Bitcoin could face significant volatility through 2026 as global interest rates fluctuate. However, they predict its long-term strength will increase once more pension funds, insurance companies, and sovereign wealth funds gain regulatory approval to allocate to digital assets. European officials argue that crypto is transitioning from unregulated speculation to a fully regulated digital finance infrastructure. They expect the first MiCA-approved stablecoins to drive adoption across mainstream commerce, banking APIs, and cross-border payments. Security analysts warn that AI-powered cyberattacks will become more sophisticated, capable of bypassing traditional authentication systems. They emphasize the need for exchanges to adopt biometric verification, continuous transaction monitoring, hardware-based security modules, decentralized identity systems. Without these upgrades, experts believe crypto theft could exceed $3 billion annually by 2027. Major investment banks, including JP Morgan, Deutsche Bank, and Standard Chartered, released reports in 2025 predicting that the next cycle will be driven by tokenized real-world assets, bonds, real estate, commodities, institutional custody services, regulatory-approved digital assets trading platforms, enterprise blockchain adoption. According to these institutions, the era of speculative meme coins is fading. The next evolution is coming from regulated financial products built on blockchain. So what does all of this tell us? Crypto is not disappearing. It is maturing, becoming more regulated, safer, and more integrated into global finance. Checkmark fraud and hacking remain serious threats, especially with AI-enhanced attacks. Checkmark regulation is tightening worldwide, creating a safer environment for long-term investors. Checkmark institutions, governments, and banks are preparing for large-scale blockchain adoption. Checkmark the next big growth cycle will likely be driven by transparency, audits, regulated stablecoins, and institutional trading platforms. Checkmark public crypto remains volatile, but the technology behind it is becoming essential to the global financial system. The message from experts, regulators, and financial institutions is clear. The era of unregulated crypto is ending, and the era of institutional digital finance is beginning.